Thanks for choosing GoldSeek.com radio as a trusted business and investing news source.
It's just a real pleasure to welcome back Peter Grandich, a legend on Wall Street. It is now January 21st in the new year, 2022. Happy New Year, Peter Grandich.
Thank you very much. Good to be back with you.
It's great to have you back with us, and I'm glad to hear you're doing well. We've talked to so many folks over 15 years here at GoldSeek. Most of our people who've been with us all that time are still here, and we're grateful for that. Just back from a visit to the local grocery store, shelves, surprisingly, never seen this in 52 years, partially bare all throughout the store. What's going on in your mind here, and how might this impact the markets?
It goes back to last year, for myself, a belief that we were in the midst of the biggest financial bubble in history. And on top of that, while that was occurring, we were seeing here in the United States, I thought, perhaps other than the Civil War, the most division politically and socially, and that the economics were really a house of cards, because if not for printings of trillions and trillions of dollars, it would have collapsed. And the separation between the 1 to 10 or 12%, whatever the number may be, and the rest of the people just kept growing wider and wider, and it was unsustainable. So for me, my goal, and what I shared to people that still wanted to listen, was sometime between Labor Day and New Year's to make cash my largest position. But I chose in late fall because the attractiveness of gold and silver in my 38 years in this business, I never seen it look better. There's a great graph out, and a man did a wonderful graph to showing basically how investment sentiment goes for everything. And at the bottom is depression and despondency, and at the top is euphoria. And clearly, the gold and silver market, by almost all accounts, was somewhere between depression and despondency. There was just, even among what was left of people that would normally be bullish, went into hiding, so to speak. And I'm not saying you in particular, but by and large. And so I made a choice not only from a capital appreciation standpoint to build a very large position in things related to gold and silver, but also to now use it as an alternative to paper money. That I got to the point where I just couldn't trust the dollar anymore, and I wanted to have physical bullion. Now, I was never a big physical bullion guy because I was always thinking of making many returns on my money. But just at that point, it just seemed, even just for the sake of physical bullion to treat as money, was worthy. Now, that was all done because I've learned, because I lost $1 million or more dollars more than once, is it's not how much one's going to make, but how much they don't lose, which is going to separate between winners and losers. And there was no question in my mind. I was adamant. I was outspoken about it. And of course, I was scoffed and laughed at, especially from the Bitcoin maniacs until most recently, that I would be so adamant and be so aggressive in one area where a lot of people basically had no interest in. So with that all in mind, the economic thing that you just spoke of, the crisis we have with inflation, the crisis of supply chain, the unbelievable political crisis we have. I mean, if you think about it, did you ever think you would ever see one party in control of all three houses and can't get anything done? I mean, that in itself is worrisome. And so I just think we're finally seeing the house of cards start to come apart. I would tell gold and silver people, you don't want it to completely come apart too fast, because then there just won't be siphoning of money out of that market into gold and silver. And it's better that it rolls over versus collapse.
I'd like to turn to the headlines today in the financial markets. And one headline that stands out is concerns that the bull may have finished running on Wall Street for U.S. equities. Most seem to believe that this is primarily a sector rotation underway. What are your thoughts?
I think it's far more than that. I'm certainly acted in my own self that way by not having any general equities that aren't related to gold, silver, and copper. And I got very fortunate when I made that big move into gold and silver, a lot of my money came out of the uranium market, which I had been very high on. But I think that market is getting to a point where you need to look at it again. But no, I think this is far more dramatically changing. I don't think this is just going to be a correction and then we make new highs and keep going. Even if, as people are saying already, oh, the Fed will cave, they won't tighten, they'll print money. No, I think what's being bared out in this is people are going to see exactly how actually bad things are. And even with that, and how over speculative, there are so many what I call the poster childs for historians long after I'm gone, when people look back and talk about how this greatest financial bubble burst and many of the causes, and they'll point to people like the lady that, became very bullish on these over-the-counter stocks and all this other stuff. But I think when people look back, things like Bitcoin and people paying for electronic paintings and all this type of stuff, this is the speculative excess that was just clearly gone way beyond. And people, to this day, even in the work that I still do, we still do planning, whether it was for athletes for over 20 years or just working people. I still find 7 or 8 out of 10 families living at least one level above where their finances truly support it. So, we just seen a study out that 60% of all of Americans don't even have $1,000 saved for emergency. So there's a whole bunch of stuff that I think is going to come out from under the carpet in this severe correction or bull market, whatever people would want to call it. And I think it's going to be too much to overcome to simply say that if the Fed just caves and starts printing money again, it's all back to hunky-dory. I just don't see that happening.
No, I mean, it makes sense, right? I mean, it's sort of the proverbial pushing on the wet string where Fed maneuvers, i.e. buying up toxic debt and manipulating interest rates lower artificially, has a less and less profound impact on the overall domestic economy. And that certainly played out. In real time, I think we've seen, especially since the 2008-2009 Great Recession. That really begs the question, are we looking at another Great Recession? Are we looking at a dot-com year 2000 bust? Are we looking at a 1987 or even a Great Depression? Or is this something new?
Probably your last one. They never exactly repeat like something before, and because there are a lot of different things now than 30 or 40 years ago, I think what people don't grasp is that we are so politically divided that, and there's such hatred. And I'm not here to discuss what party's right or what party's wrong, but it's no doubt, even within people's own party now, because 2 senators decided to go not with the crowd and feel that certain can happen, the hatred from their own party towards them. If we have a financial crisis like we had in 2008 or 1929 or whatever other times, I don't think the parties can go in a room like they did before and come up with some sort of solution. I really don't. And that's the real difficulty. And I'm extremely concerned after watching the president's so-called press conference. It's understandable why they haven't wanted to have him have press conferences. The fear of lack of leadership during a crisis, I think, cannot be underscored enough, that if we get to that point, and once people don't have confidence, you don't have credit. I mean, this country runs on credit. And no one was a better example of that, by the way, a couple of decades ago, was Donald Trump. Donald Trump the banks they were knocking themselves over to give him money. And as soon as they thought he had a problem, he couldn't get a dime. And that's what the United States could face. I've never been that way. I've never predicted these, Armageddon type of act, but we legitimately now are in, up that creek. Let's put it that way. And so that's why I don't see any easy way out. I certainly, as a man that's going to be 66 in a couple of months, I don't see another great bull period in my lifetime, even if the good Lord has me here for another 10 or 15 years. So I just think we're going to pay for decades of living way beyond our means and politically, socially, and economically now.
That does sound emblematic of what followed the great crash of 29 to 32. There was a solid 15, 20-year recovery period, so you're looking at nearly 2 decades. Seems to parallel. On a more positive note, though, I think you might agree that during the pandemic, oil couldn't give it away. It was something like -40, close to -30 or $40. They'd pay you $30 to take a barrel of oil at the time. And then fast forward to today, and there's estimates of 100, 150 and higher per barrel on crude. So sometimes when things seem most bleak, opportunity seems to be knocking at the door. Where do you see opportunity here now, including the metals?
Nothing was more opportunist, in my opinion, because that's where, outside of cash, I went big time in my own portfolio, and that was the gold and silver market. There's no question that they became more attractive to me than in any time in 38 years, even when they were a lot lower in price, given the overall fundamentals, given what almost zero interest, and literally thrown in the towel by most people when fundamentals still remain strong. I also feel that way with uranium. It's just that we did so well and we had to take the money from one place. But there's just going to, listen, this talk of, well, everything's going to be electrified. Everybody's going to have electric cars, electric planes, electric. First of all, my question to everybody is, where are we getting the power? A lot of places here in the United States, just in the United States alone, are worried that if a storm comes through now, they can't provide the power. So what if we double or triple the need for power? Where is all this ability to provide it going to come from? Okay. Then the other thing that I always ask people, and I say to myself, just they talk about interest rates. Okay. Inflation is at least 5%. It could be 10%. Who knows? It's somewhere in that level. They're still, even though they say bonds have come off, it's still under 2%. You can only have a couple of things happen. Either inflation has to come really down or the rates have to go up. Well, listen, if the Fed does simply stop buying bonds, which remember, they've been as much as 2/3 of all bond purchases these last couple of years. Let's just say you eliminate from them. Would you accept money now to give somebody at 2%? No, you're going to want at least what you think is going to be the rate of inflation. So the interest rates, no matter what people think, have to go up if you believe inflation is going to be. So one of the places that is getting absolutely creamed quietly, it's not getting the attention of the stock market, is the people that used to be, before the Fed destroyed it, dependent on the fixed income market. And we had people that put money in, not me, I begged them not to, but people that bought bonds when they were just 1 or 2%. Think about it. If it just goes back to 4 or 5%, that's a fixed income, so-called safety of principal product that's going to have a double-digit loss. And the last thing I got to point out before we run out of time, and I see this because I live and deal with, obviously, in my age bracket, with a lot of people 55 and over in communities and things of that nature. So many of these people who have already retired, not just people who are late in their work cycle, but have already retired, in order to replenish, because they can no longer count on the fixed income market, bought stocks that pay dividends so they could live a lifestyle that they've grown accustomed to. Well, if you and I correct, it sounds like you're not exactly that great bullish about the future of the economy and all. I can tell you one thing that's going to happen. Companies aren't going to be able to service the dividends in the same manners. And once that happens, I've had so many people in that bracket say to me, Pete, I don't care if the stock goes down 20, 25%, as long as they keep paying the dividend. And that's a story that no one's talked about yet, about how many people have gotten accustomed to living off dividend payments and what will happen to dividends if there is a recession or a downturn.
Whether or not a dividend increases or is even issued at all is a quarterly decision by the board of directors, typically, and the executive members of most corporations. So it is not uncommon or atypical during difficult economic periods for dividends to evaporate and or drop precipitously.
I entered the business 38 years ago, and when I came in, it was the early 1980s. The stock market had not gone up for 27 years. It traded between, 700 and 1,000. Japan at the time was going to take over the world. Now it's China. Business Week ran the famous magazine, Equities Are Dead. People were not interested in general equities. And a young man came out of Georgia named Robert Prechter and talked about a Dow going to 3,700. And they thought he was crazy. I mean, listen, it's only traded between 700 and 1,000 for almost 3 decades. And of course, the end result was we went on the longest tear of a bull market, and we went way past 3,700, but it was inconceivable. Well, I can tell you this, and I know this is your livelihood day in and day out, but it's not mine, but I can tell you this. I've never been more confident than what I'm about to say is people basically threw in the towel, the kitchen sink, and everything on gold and silver in 2021. And part of it was because of this biggest hype of all time. I think not only is this the biggest financial bubble of all time, but Bitcoin is the biggest hype of all time. Not to say that cryptocurrencies won't be here, not to say that just like the internet, there was a great shakeout, many went bit to dust, but out of that grew some great companies. So will that be in cryptocurrencies, but not after many of them collapse, go out of business and all. But Bitcoin, I never said anything until it got to 65,000, and I begged people to sell. I called it the AOL of the cryptocurrencies. And if people can remember what happened with AOL, the same is going to happen with Bitcoin, in my opinion. So I just think that gold and silver, this talk that somehow Bitcoin's the new gold, the guy that leads this talk, this man Saylor, who would tell people, I mean, the financial commentators that allowed this man to say in front of them and not respond when he said, sell everything you own, everything, and borrow if you have to, and put it in Bitcoin, not even across the board in cryptocurrencies, but just one, I think will be the biggest point of signal when people look back about, man, that was the time when we knew we should have got out and so forth. And there are just so many people. And of course, it'll be mostly the public that will be the people who will suffer greatly. And so I think I think this is just the time to find the foxhole like I have, get comfortable with some gold and silver in there with you, maybe a few speculative things if you must, and wait out a very big storm that's ahead of us.
No, it's well said. I mean, it's just basic principles of finance, isn't it? To understand that if you sell the farm and get married to any one particular sector, you're taking on at least 2 or 3 forms of risk. One is the opportunity cost or risk associated with missed opportunities and other markets that might go up. The other risk is that you're inordinately fixed on one particular asset. And we all know that that's a little bit like having all of your heavy materials on one side of your vessel. You're likely to capsize the entire vessel. If you wouldn't mind, please, sharing all the great contact information you'd like to leave with folks. I know that you're basically moving on and enjoying your golden years here after a fantastic career, but you may still like to keep in touch with folks.
Well, there is a website, petergrandich.com, where there's a blog, and currently still speak on Twitter and give my personal views, not as investment advice, but just sharing what I'm seeing and what I'm doing for myself.
Once again, wish you a fantastic year and hope to hear more commentary in 2022. Thank you, Peter Grandich.
Thank you.